Hi, my name's Penny. I'm your tutor for personal asset management. This is our second video on our topic for week 1. We're going to be looking at the asset classes. So these are all the asset classes that we divide the investments into. In our first video, we had a look at all the different types of things that we could invest in. So we split these up into these 5 categories: cash, fixed interest, property, equity, and alternative assets. So the things we want to think about in each class is what return will each asset class produce? And what are some examples for each asset class? So let's go and have a look. Okay, cash. So cash is a nice, easy one. We can all relate to cash. Hopefully we've all got some in the bank. So cash, if we have some in the bank account, then the return it will give us, it will produce income from interest. Now, at the moment, it is true, the interest rates on cash are terrible. So if you have a term deposit, you're only likely to get a very small interest rate, but nonetheless, there is a return. Cash doesn't grow. So we're discussing in the first video about what we wanted from our investments. We were looking for capital growth and we were looking for an income. So cash is going to give us income in the form of interest, but it won't grow itself. So examples of cash, just cash in your wallet, notes and coins. You could have deposits that you could at call deposits, or you could have term deposits, so less than 12 months. So we can get a little bit of interest from these. Okay, so that's our asset class, cash. So the next one is fixed interest. Now it's got that word interest in, so it can confuse people. But what you need to think about with fixed interest is this is all about bonds. So government bonds or corporate bonds. The government often sells bonds as a way of raising money. But also this does happen with corporates. So they also may sell bonds as a way of raising money, and people can buy them as an investment. So a bond will give us, for our return, it will give us an income, which is interest, or coupons is the word that we would use. And it can have growth. It could be a premium bond or a discount bond. You can also have hybrids. So you could have preference shares or convertible shares that are a mixture. And we'll talk more about bonds later on. Each of these asset classes will spend a week learning all about the intricacies of them. Okay, so property. You'd be familiar with property. So examples of property: residential property, commercial property, so buying a premises that is rented out by a business, or industrial property, or you could buy vacant land. Now, if it is a property that you can rent out, then you would get income from a rent, and hopefully you'll also get capital growth, though it is of course possible that the property prices will go down and you'll have a loss. As a bit of a side thing here, we've got infrastructure. So infrastructure, which is made up of toll roads, pipes, bridges, dams, things you probably would not normally consider as ones that you could invest in, but actually you can invest in these as well. Power stations, railway, power lines, there are all kinds of investments for infrastructure. So equity, that's another word for shares. So for shares, you could buy in Australian shares. We talk about the size of the businesses, so large, small and medium caps. So that means the market capitalization, how big the business is. You could also buy international shares, and you could have private equity. So that is buying shares in a business that's not listed on a stock exchange, it's private. Then we have returns made up of dividends. So that will give us income if the business is making a profit and is sharing that. That will give us income of dividends. And hopefully there'll be a growth if the share price increases. But of course, there may also be a loss if the share price goes down. Then there are hybrids, so preference shares and convertible securities. One more asset class, and that's our alternative assets. So they're made up of all the kind of ones we can't think of or where to put in anywhere else. So hedge funds, derivatives, collectibles, for example, dolls, antique dolls. There's an example of collectibles, artwork, commodities and currency. So the income, these would be quite varied. They may not give you any income. If you had artwork, for example, or other type of collectibles, clocks or dolls, they're not going to give you an income. And the growth is also varied. They may increase in value or they may not. Right, well that's our topic on asset classes.